All right, good morning. It's Dave Knight here of Knight Capital Management and also 123 Day Trade. I've been in, well, I guess I've been in uh, incognito, I guess to put it lightly. I've been really working on a trading strategy that captures my strengths and uh, the weaknesses that I have as a trader. Especially as a small account trader, I want to put something together that that works. Obviously, that's the top things off. So, as I looked at trading, and as I look at trading, I should say, what I think um, as a small account trader, what I've kind of deduced that to some of my major mistakes that I've had. And that I have committed over my as a small account trader. One is over trading when I'm in a losing position, trying to make money back that I've already, I should just be done with the day. Revenge trading. I mean, I've done them all. Um, so so I started thinking about that, and also, trading inside a non-trending market, and that's probably one of my worst faults, especially as I've moved into the day trading realm outside of now. Long story short, positional trading and swing trading, I understand that, but what I prefer to do at this point in time is the day trade, and I like to day trade the crude oil market. So um, anyway, so what you're looking at in front of you right now is a 2000 tick chart, and I like to start looking at the market about 30 minutes prior to 1. So my market, or the time that I'm looking for, is between 1 o'clock to 2:30. Now that coincides Eastern time with the open outcry. Now the crude oil market, it'll trade from roughly the open outcry of the crude oil market is 9 9 a.m. Eastern time to 2:30 p.m. Eastern time, and I've deduced that down to a very specific time that I'm going to look at. Now there's some exceptions to the general rule, like everything, but the general rule is that you want to start trading at 1 and then be done by 2:30. So at 12:30, I'm starting to look at the market, trying to determine what is happening in the market. Now, if you look at the 2000 tick chart, you can see that this market, I mean, obviously my 7-year-old son can say, "Dad, it looks like it's going up." More importantly, at least as yesterday, we were holding above the high of the previous day. So not only have we been going up, but we are going above the high of the previous day and holding. So, in my humble opinion, this is a market that you should be looking at in only one direction, unless it fails and closes under significantly, and then you might be able to look at the short side. But right now, the only trade that you should be looking at would be a long entry only. And as you're looking at the daily chart now, I do start my I look at the dailies. Let me pull that up. So here's the daily chart of the crude oil market. So I keep track of what now. What is this telling me right now? Right now the market's telling me that this is the 50 bar MA, 50 bar moving average, and this bar up here is their 200 bar moving average. And we're trading inside the middle of this. So this is kind of like I like to call dead man's area. But right now, what have we noticed about this market? It looks like it's recovering from this low here. We had a previous highs up here as far as day trading goes. This is the highs up through here, right? And right now we've covered up, and now it looks like it's trying to make a move back, at least in my humble opinion. The 50 bar MA has supported and showed support. So the next obvious target that you would be looking at perhaps would be the 200 bar MA. Now that may be more of a positional trade, catching roughly about 10 points here, or even not positional, a swing trade. But this is showing significance. Now looking at the chart here, it's telling you that hey, it looks like it wants to go up as well. Now I want to show you specifically the trade that I took yesterday, and hopefully the reasoning behind that. So let me pull up my other chart. So here we are at 150, and by the way, the market has held. Let me show you here. So here's the market holding above the high of the previous day, and here we are at roughly 150, And we're only looking one direction right now, right? Correct? We're only looking, as long as we stay above the high of the previous day, we're only looking in one direction to trade this market. We're looking for a solid long setup to come in. And what I see coming in is this test of the market right in here. We see a test coming in, and you can look here at the 89 tick chart and the % R and the volume underneath that right now we're seeing the market separate. But I want to show you something specifically that I'm looking for, since I'm looking one direction here, right? For now. Right here, our mountain, my indicator moves above. We're above the red line here, which is what I'm looking for as well. The green line here is here, and then the blue mountain is above it. So we see that we've basically set up a 0 point right here. So here's a 0. Wave theory, right? Now looking at volume, volume is not showing us one way or the other which way it wants to go. So we want to go with the trend then. So there's no counter trend move here that's telling us that, hey, this is a valid short signal. See that we close above through here. Here comes our entry right here. This is your 1 point right here. Now this is a quick, I mean, this is what time is it? It's 2 o'clock here, and your entry point comes at 2:11. So you got like 10 minutes here that this market has moved from the low to right here. Now it's still within time, because we want to be in hopefully before 2:15, and we want to be all out by 2:30. So right here is your 1 point. And your wave is forming here. Here's your 2 point. Whoops. Move this over a little bit. So here's your 2 point. Here's your 0, 1, 2. And what we're basically looking for is the market to move up. At least that's what I'm looking for. And looking at our indicator here, we can see that we've moved, and the mountain is higher than the green average line. So momentum is driving this move. It's on our side. So yesterday, let me pull one thing in here. Yesterday's ADR was 2.5. So that translates out to, I'm looking for about 15, 16 ticks on a half a P move, and then looking for roughly 2P. Now I didn't move 2P yesterday during the time period, but it did capture a half a P move on both contracts. So roughly what I made in the yesterday was $250 on 2. So I came in here at 91.94 on 2 contracts, and I was looking at a half a P move, which 25 ticks is would basically looking at a stop loss of roughly 13, and you're looking for a target of about, I think yesterday's target I was looking for 16. Yeah, 16 on my target, and that would be to get rid of half of my contracts. Right there, the market runs it and takes it out. So I'm at a half a P move right here. Now this happens quite a lot, by the way, that the market moves up and then it retests. I mean, if you're looking at a wave theory, that's just beautiful wave setup, right? Maybe a 3 point, a 4 point. Now this is a wave inside of a wave though. So I mean, I classify it 0, 1, 2, but this, you know, if you had a wave theorist in front of me, they would tell you this is not a 0, 1, 2. They'd tell you that this is a move inside of a move. But as a day trader, and what I'm looking at, this is my 0, 1, 2. And this is my wave signal. Here's my half P exit. And it doesn't hold. And I captured, I think, about 10 ticks in the last one. 16, and then I think 9 ticks, 15 and 10, or I think it was 50. Yeah, anyway, so it ended up being $250 on 2 contracts. It was an okay setup. I mean, this is where I saw support, and I decided to go ahead and take out. I believe what I did is I decided to take out at 03. after this right here moved up here, and then it come on down and it ran me out. And I had my break even stop in, by the way. Once the market ran me here, you know, I was already at break even. It wouldn't hurt me, and I decided, you know, this is closing in towards the end of the trading day at the 230 mark. Now the market does it right before 230. It takes off and it shoots up here. Let's see if I can see that. As I looked at it later, it's like right at about 230, it just runs right there, 229. So I mean, it did run. I think it ran about a 2p move yesterday, which would have captured in roughly 60 ticks, I think, on the yesterday's move, roughly about $600 if you had the patience to hold to about 230. But the market was showing one way or the other. Really, I mean, it wasn't really showing which way it wanted to go. I mean, the only thing I was looking at is the market to be able to move up. Now, I was definitely keeping in mind my yellow indicator up here, the high, the upper average daily range, and I thought maybe we'd shoot up there in the afternoon and run that between 1 and 2:30. So that was my thinking during the trading day. I hope this helps as I look at it. Now, when you're building your own trading strategy and trading method, you know, very specifically, what I was looking for was I knew a direction I wanted to go, and I was just waiting for my momentum indicator to give me a signal that the down move was over, at least temporarily, so that I had the odds in my favor to go long. And this is where I was looking. This is where I saw value in yesterday's trading here, right here at the. I came in at 211 yesterday, 210, 211, I think it was. And I was all out roughly right here at about 214. So I think the whole move was about, it seems a lot longer when you're in it, but I think I was in like 3-4 minutes tops, and it ran and just did a little bit there. And it is what it is sometimes. You know, you get your target and then you move on. You could have ran out with a couple ticks here on this last move here as it moved down here. But I saw this holding here, so then I decided to come in at this area and capture in 10 ticks as we closed into the close at 230. So management of your trade, that the runner part of that trade, it's basically what I'm looking for. I'm looking for the market to continue to move in the direction I'm looking for, or get out. But if it's failing, I want out. If it's not doing what I want it to do, I want out. So this was just a simple setup as far as what I'm looking for, and I hope it kind of makes sense to you. And Dave Knight here at Knight Capital Management. Feel free to give me email at tiger@123daytrade.com. So that's tiger@123daytrade, or you can send me at tiger@knightcapitalmanagement.com. Either one, I look at either email. So take care, God bless, and we'll see you in another video. Bye now.